We have had more hot data coming in this week, but you know what? The markets don't really seem to care. On today's show, we're going to be diving into that, looking at this CPI number that came back, the PPI number that came back, the weeks ahead in the market, where we think things are headed going into March and the next FOMC meeting. A lot to digest. Before we get going, please hit that like button, subscribe to our channel. Nothing we say is financial advice. We're two guys who just love to follow the market, bullshit about it, make our predictions, place our bets, and see where the chips may land. Do your own research before any buying and selling decisions. Kevin, we got the PPI this morning. It came in hotter than expected. No surprise there. We're seeing, the CPI number on Tuesday. If you look beneath it, food is continuing to go up. That's not great. Energy went up pretty significantly. Once again, not great. So this bullishness that we're feeling in the crypto market, in the stock market, I think that it's ill-placed, and it's going to be a matter of time before things start to kind of crumble. And we're seeing the cracks in the foundation already for sure.
Yeah, I feel like this is almost like a perfect market for people who are big institutional players just to get out, just to move to cash positions or be risk off for the next few months. Obviously, the sentiment from consumers is, we saw the data come back, what was it, yesterday, about January retail sales. Consumers are buying, and they seem like they're buying right now in the market. And for me, there's so many indicators that don't make any sense why certain things are pumping while the dollar itself is pumping. That doesn't tend to happen often, but it's possible, but we'll get into it when we talk about the DXY. But there's a lot that's going on right now that doesn't necessarily make a whole lot of sense. It seems like the market might be uncertain. Obviously, big money, I think, knows the play of the market with all this data and everything like that. I think they're staying true to their plan, but it seems like retail just won't stop buying, and that could be a terrible rude awakening if we see another hot print in March, like we were talking about.
Yeah, if we look back earlier this week, the CPI came in and it was under the previous month, but it was still more than expected. And right now, this market is purely going on what is it expecting to happen. The market doesn't like unexpected things, right? So when they price something in and it comes in above that, that's going to send the market down. Now, we also saw Wednesday, like you mentioned, retail sales for January were expected at 1.9%. It came in at 3%. If you take out motor vehicles, it was up at 2.3 versus 0.9. So there's still a lot of money going on, floating around out there. And that is not going to be what the Fed wants to see, because that's going to allow, manufacturers and everybody to keep the prices higher if they can see that there's still plenty of money going around. So that is not great. And then producer price index came in hotter than expected today as well. So that's 3 days in a row of data that, at first glance wouldn't seem terrible, but we're supposed to be heading in a better direction, and it's just not happening.
Yeah, no, this is terrible news considering what we saw last month. Obviously CPI it's still down. We talked about it on the show. We didn't expect it necessarily to hit expectations, but we expected it to be down. Maybe the March one is where it comes in a little bit hotter. But we also talked about how CPI has been revised for the past few months too, last episode.
Yeah.
So who's to say that this month isn't actually equal to last month? Something like that.
We need to dive into it too, because they're changing around how it's calculated, of course. Yep. And so it's not, we're not going to be getting, I think, the true picture of what is happening. And that, I don't believe in coincidences. So I think that's a big problem. And next week we get the PCE data, which is, often described as the Fed's preferred inflation data. We'll also have the minutes from the February 1st FOMC, which in Jay Powell's speech, he talked about how there is going to be a lot in the minutes that would kind of show how they were thinking for the rest of this year. So that's going to be interesting. If we look at some of the predictions for the March meeting, we see that CME Group revised their probabilities. Now it's at 15% chance of a 50 basis point hike. That's up from 9% before this PPI data and 0% before last week. So, we were talking earlier this month and they were discussing hey, most likely 25 basis point, but some chance of no hike. And now the no hike scenario is out the window, and we're getting a steady increase in the chance of a 50 basis point. I was talking to you before the show started. There's a lot of data still come out before the next Fed meeting, which I believe is the 23rd or 22nd of March is the next rate hike. Before that, we have, like I said, PCE on Friday. And then between the 10th and the 15th of March, we're going to see the February unemployment number, February CPI, February PPI. And if those numbers come in hot, not only do I think we're going to see a 50 basis point in March, but I could also see the market begin to toy with the idea of potentially a 50 basis point in May as well. Everyone has been saying that, like, oh, we're getting close to that, 5% terminal rate, 5.25. What if we need to go to 5.75 or, God forbid, 6%? Like, that's a very real possibility. And if that's the case, the markets don't have anywhere close to that priced in. And watch out, because things could get shitty real fast.
Oh yeah, I mean, like obviously, like the thumbnail says, this is a house of cards at some point. We're getting tons of data. We can still continue hoping that, we hit that 5% rate. I think it's a lot closer to 6 that they're going to end up having to raise it to. Just that makes more sense if they want to tackle inflation, actually keep it down. Right now, I think that we're on the pivot going to the upside, but we'll see next month. Like you said, there's tons of stuff that 1 week that's going to be absolutely catastrophic if the market doesn't realize, or consumers continue to keep buying. Like, we could honestly just like not see a correction till then, and that could be just like one massive capitulation, and then we just bleed out for the next few months because, okay, we realize that this isn't over. It's the fight with inflation still going on, and we probably won't see a bull market, but somewhere between mid 2024 to early 2025. So that's a very likely possible scenario. And right now we're just in this long, extended, multi-year bear market, and then we'll find some accumulation phase, hopefully somewhere towards the end into the beginning of the next bull market. But right now, stuff still looks extremely grim.
Yeah, 100%. I don't think there's much of a chance for a pivot anytime this year. Originally I thought that they would hike in the first 3 meetings, pause it until like November, December, and then pivot. But at this point, I think we're going to see a hike in March, in May, potentially in June, and then if not in June, a pause in June, and maybe through the end of the year. Like, that seems to be the most likely scenario at this point, in my opinion.
Yeah, and what does that spell for a lot of consumers? That pretty much just means that there's going to be massive unemployment coming your way. Like, these companies aren't going to be able to afford to keep a lot of people, and it's just going to eventually destroy people. They have tons of debt. They have no job. What's going to happen? I mean, it's almost like a perfect storm of everything just hitting at one time. It'll be really interesting, but definitely something, if you're not preparing for it, if you're just expecting like, oh no, we'll be fine, we'll get through it next year, we'll be back in a bull market. You don't know that.
Yeah. Yeah, 100%. It continues to be just accumulate cash and be patient. And right now, the big money, I don't know, it feels like things are a little manipulated to me. It feels like, especially in the crypto market, some of the big players are keeping the prices up so that people feel not just a sense of FOMO because prices are going up, but almost a sense of security that prices are holding where they are. And we're going to see, I think, crypto is looking strong. At BTC hit 25K today, ETH at 1700. I could see them running a little bit higher maybe, but I think at some point the big money is gonna be like, okay, everyone is too excited. Now we pull the rug out, and that's when we hit capitulation. I still think that the capitulation event is going to happen, and maybe we see crypto remain hot for the next month until those reports start to come out. But the rug's going to get pulled, and people are going to finally hit that point where they're like, I thought we were back in a bull market. I can't take this anymore. I'm out. And that's when we lose a lot of people. And that is when the big money starts to be like, okay, now we can accumulate because we're buying their tokens from them for a lot cheaper than they were willing to sell before.
Exactly. And that would play into the plan that we've been talking about, that big money institutional investors were definitely going to do at some point. They were going to get everyone to be holding their bags so that they could later sell it at a cheaper price. But I told you my little conspiracy theory over text today. And I honestly think that we are being manipulated. Again, it's nothing we can do about it. But I do think that a lot of the manipulation is coming from stable coins. I don't have any, I'm not going to accuse any exchange or anything like that, but a lot of these stable coins are minted through the exchange or some partner with them. Obviously, we saw like Alameda and FTX, how closely tied they are together. But, there's tons of stable coins out there. There's USDC, there's Tether, there's BUSD. What's to say you just can't mint this stuff? It could be an algorithmic stable coin. And then they're just twapping. They're just buying the crap out of these assets, and it's keeping the price up. And then, so sure, retail money starts coming in, and it's just like it's a fake. There's no actual value to any of what's going on here. And then retail just supplies all the money. They get out, and now retail's holding a bunch of coins that weren't necessarily worth the price that they paid for, and then they just have to end up selling at a loss. Again, that might be part of the reason why the SEC is going after stable coins. There's so much, regulation crackdown coming down. If that's actually happening, that'd be terrible. That would destroy the space.
Well, there was that report that the SEC is going after Circle, who is, created USDC, but that, the tweets about that were quickly deleted when a spokesperson from Circle was like, we never received any notice that is being, circulated that we did. So I'm sure that the SEC is doing something about stablecoins because they want to create their own, right? Yeah. They want that central bank digital currency.
They got Paxos right now.
But yeah.
So Paxos issues BUSD, and they were the first ones, I think, out of the stable coins that they were going after. Right after the Kraken broke, Paxos got hit. Obviously, they're not they mint BUSD. They're not associated with Binance directly. However, it's Binance, United States dollar. You know what I mean? So we never know exactly what's going on. This is an unregulated market. Sometimes that's a great thing. Sometimes it isn't. You never know really until it's too late usually. Obviously, we saw that with everything from, 3 Arrows to Celsius to even FTX. So it'll be really interesting, but it's just a theory I have. It's very easy for these companies to be doing it. It's like I saw TUSD was like there was tons of that being minted. I never heard of it in my life before, but 2 people that were doing it were Binance and Justin Sun. So there you go. It's just something to keep in mind. Again, there's also tons of noise. So at the end of the day, you can't control a lot of this stuff. Just got to be patient and just understand that the macro looks like shit.
Yeah, there's also this narrative going around because the story broke that June 1st, the Hong Kong government will allow the buy, sale, and trade of crypto in Hong Kong, which that narrative right there has pushed a lot of people to thinking that we're going to see a bull run started as a result of that.
Good luck.
I mean, I don't know. I don't know, what the precedent is for that, so I'm not going to speculate on it. That is a narrative I've seen being pushed heavily on Twitter over the last, 24 or 48 hours, whenever that news broke.
Yeah, I haven't heard anything about it, but again, if you're in crypto and you're not KYC'd, I think you were doing it anyways.
Yeah, exactly. And that's been like one response. People like, oh, well, institutional money over there. I'm like, all right, they probably had exposure in some way or another. So whatever. That I don't think that is. I think that's more hopium that people have that we're going to continue this run that we're on. I don't think it's based in reality. Let's get into. You want to jump into the charts? Or is there anything else we want to talk about on the macro front before we looked at those?
Nothing too much. I just want to bring up that yield curve thing because I saw that, and that's just an indicator for me where I was like, okay, my convictions. I can sleep safely at night knowing that we're in a worse place than we were in 2000 and 2007. I can get some sleep tonight. But yield curve, it's inverted currently. In 2000, it was inverted. Let me see what the actual number. I believe it was -0.2. And then in 2007, right before the Great Recession, we were at -0.4. Currently, we're at -0.83. So there you go. That's just something to keep in mind. You're 2 times worse than you were in 2007, and you're 4 times worse than you were in 2000, the dot-com bubble. Dot-com bubble was what, 50%, 55% for 2007, 2008 recession. So again, I was just asking for 20%. That's all I was asking for. But the market wants to go down 50%. I got cash on the side, so very interested in seeing how that plays out.
Okay. Let's get into the charts, and we'll start with the DXY. As you said at the top, we're seeing the DXY go up as risk assets are going up. That doesn't make a whole lot of sense, but let's kind of dig into that and see if we can figure out what exactly is going on there.
Oh man. I might have to have you pull up the DXY. Hold on. Oh no, there.
Oh no.
No, we're good.
There we go.
Got a new computer.
Okay.
You know how I'm.
I don't have all the fun lines that you do, so that would have been disastrous.
Oh, no worries. I could do this in my sleep, JWeb. I don't need any lines. This is just to make people think I know what I'm talking about. But I'm just kidding. But here, you got to get a mouse too. All right, there we go. So we can see the DXY has been pumping like crazy. we hit this liquidity, this demand zone right down here. Obviously, we tapped that and we just started shooting straight up. Traded in a little bit of a bull flag right here, came back up. We're above the 50-day moving average. We did shoot up to, what was that? It's about 104.24. So we've been moving pretty well. And the stochastic RSI is, let's see, right now 94.90. So there's room for it to go up a little bit more. I'm not asking for it to go up a little bit more or any more. Honestly, I think we do need to find some retracement. But if it wants to go up a little bit more, and then we've, obviously reset this and we find some support at this white line, 103.69, that'd be pretty ideal, because then that paired with the weekly, it would look like we would have some good progression to the upside. As you see, we're coming up here. Again, we were oversold from November of 2022 to, I would say, right here, January of 23. So about 2 months we were oversold on the weekly. Granted, we were oversold on the monthly for a long time, as we've been coming down in this thing since September. But I do think that the dollar is going to be pumping. Obviously, the fact that it's pumping as Bitcoin is going up, that's really weird. Again, that might be the manipulation that we've been talking about. But I think the dollar is really strong here. I want to see this retracement on the daily. That's going to be something that I'm really going to be keen on watching, because at the end of the day, we are below the 50-day moving average on the weekly. I would like to see us close maybe above that, and then next week the daily starts to correct. We have what? How many days left in the weekly? Oh, we only have like a day left. So yeah, I forgot that this doesn't trade at crypto. Closes on Fridays. Anyways, this is going to close tomorrow, so hopefully we can get above that 50-day moving average, and then we start to see the correction on the daily stochastic RSI next week. Doesn't have to be a lot. And again, I don't think this is going to really take off until we start seeing some of this CPI data from next month. I would be more curious to watch this move on the CPI data than Bitcoin or anything else, because again, I do think that it's a little bit of manipulation. I do think that you're not going to expect it when the actual drop happens. Again, it's a house of cards. Don't think that one day that everyone's trading on is going to be the end all be all. It's not going to be like the final game in what's that movie? Any Given Sunday. We're not going to be anticipating it. It's just going to happen, and everyone's going to be screwed. So
there you go. All right, anything else on here, and then before we get into Bitcoin?
Nah, that's pretty much it for the dollar. Let's go to Bitcoin. So this thing dropped a little bit. Obviously, it shot up a ton in the past 2 days, but we can see on the stochastic RSI for the weekly, we are overbought, which is good. If we are bears, we're anticipating it to come down. We can see that the volumes also on the weekly are slowly coming down. It's kind of hard to see here because they have this stupid US dollar news and whatever stuff they got on trading. I got to figure out how to get rid of that. But you can see that the volumes are coming down on the weekly, but the price is still shooting up. That doesn't give me a lot of hope. That almost seems like honestly, this week, the volume is even below where it was last week. And we saw just a little bit of a sell-off, and we have more price action to the upside here. So that's not necessarily something that seems organic. That seems either it's not going to be long lasting, or it is some form of manipulation. But we see that we came up here, we tapped this blue line. This was the line that I was talking about. I feel like maybe 2-3 weeks ago, that if it did break out from this 200 EMA, that we would retest it. So it looks like we broke under it. We tapped liquidity in both directions. And let me say this about liquidations. It has not been strong. We only had $200 million worth of liquidations about today. Yesterday, about $180 million worth of liquidations. That's not necessarily a ton of money. I mean, it is, but it's not a lot in terms of when we saw FTX, we were at $800 million, almost $1 billion in one day. So this is, just grabbing some money. This could be just trapping some more people. And then maybe some large leverage positions are right around this area, so people are adding to it. And then potentially that just allowing, the price to eventually pull to the downside, because there is more money pulling below. I think if anything, we're just building liquidity to the downside, because the more people that go long here, believing that this market is being propped up and there is legs to this and we are in a bull run, that liquidity is just going to keep building below. And if this price keeps going up, there's going to be a huge amount of liquidity that just needs to be tapped, and people are going to either have to close their positions or they're just going to have to lose, and someone's going to win. It's usually going to be the market makers who maybe even set this entire push to the upside up. So that's something to consider. I still say this is actually USD. Let's go to, there we go. I still say we did hit this death cross on the USD trading pair. I would be, I would be an idiot if I were to give up on this right now. I'm talking about myself personally, because when I look at the stochastic RSI, I see that we're finding resistance here on the 200 EMA. We got rejected and we're coming down. We didn't actually come up higher than this level right here. Doesn't need to come up higher than that, but I mean, obviously that would be a pretty good indicator that we are in a bullish price action. I think that finding this rejection here on the 200 EMA after a death cross, after being rejected from it a couple of times already, I think on the other chart, but we can see the volume's still coming down. This thing on the macro is just looking prime for some downward price action. Again, how much is that? I don't know. I still have not given up on the thought that we are probably going to be somewhere between 11.5 and 12.5K Bitcoin. I still think that what happened in 2018 is still highly likely, where just the market gets flooded with tons of excess Bitcoin. There's too much supply supply outpaces demand, and people are just selling at super cheap prices, and that just offers a ton of accumulation for a lot of big money. But if we look in the daily, we obviously are above the 200 and we are above the 50 EMA. But we wicked all the way up here, and then we're currently right here. That's almost like not a double top, but if you want to consider it, sure, maybe. I think that we're going to end up coming below this again. The daily stochastic RSI over 2 days shot up an insane amount. We're at 69.40. This thing's going to be overbought by tonight's close. I don't see a lot of long-lasting price action, at least to keep it above a certain level. I think this is everything that's being propped up right now seems like, this could be a massive fake out. I think just people are getting trapped here. I know it's easy for me to say that, oh yeah, it's going down. I've been saying it's been going down for 4 or 5 months at this point, but this paired with the macro, I don't see a world in which this doesn't come. Something's got to give at some point. This is an absolute house of cards. It's built based off technicals, poor indication that this is a bullish move to, I don't know, 69K, back to all-time highs. And just fundamentally, and in the macro perspective, this is a terrible time and it's showing that the markets are decoupled with the economy. The economy is, beginning to falter significantly, and the market's continuing to go up. That doesn't correlate well to what will eventually happen. And again, this happened in 2008, happened in 2000. It's just a matter of time. It's just, I can't rush it. You just got to be patient. It's got to play out.
Yeah. I mean, Bitcoin's at a 6-month high. Last time it touched 25K was 6 months ago.
Yep.
I think there's also the people who are talking about how oh, well, that's just because we're back in a bull market. It's like, we haven't seen economic conditions like this, with crypto ever. No. Crypto has not been around since the last true economic crisis. And so, I mean, because the COVID crisis lasted all of a few months and then things started to pump again because money printer went burr.
Exactly.
But now that money printer cannot go burr, we're seeing it's a whole different ball game. And, trying to say that oh yeah, it's coming back up, this is just a quick retrace of 25 before we go to 30, because there's still a lot of the Uber bulls out there saying we're going to 30K Bitcoin. I have my doubts. Am I still holding some? Yeah, because I don't really trade it. I just kind of accumulate it, but I don't think we're going to. And that's how I'm playing things right now.
Yeah, and again, I can't really necessarily tell you where in the short term. Obviously, I didn't see the move to 24K the first time. Then obviously we went through retracement back to 21K, and now we're back at 24 and a half, around there. Hit 25K today. Again, this doesn't naturally seem right to me. It hasn't for probably a few weeks. That's why I haven't been focusing on the charts as much. But I continue to look at the data that's coming out. I continue to look at the macro on the charts, and nothing is telling me that we are in a bull run. I don't see an accumulation phase that we were in. If you want to call it 2-month phase, an accumulation zone where we're just ranging back and forth, be my guest. I wouldn't have bought in that range personally. It just didn't seem like we were primed for a position to go sideways. We just kind of went one way or the other, and it was to the upside because obviously there's a lot more liquidity. Now it just seems like they're just trapping tons of liquidity, and we're in massive, massive distribution. So I don't know. Again, this is very sticky at this point. I'm just got to trust the plan. You got to have a plan first off, and then just execute it. Because right now, if you're trying to chase gains, it's just stick to the rivers and lakes that you're used to. I wouldn't I wouldn't be going crazy trying to chase all these gains.
Oh, it's a good show, and Kevin can include some TLC lyrics. Yeah, I mean, relief rallies, they happen, and they can last months at a time, and that just feels like what we're in right now. So, like, a relief rally is going to turn into a bull trap before things go south again. Let's move into ETH, unless you have anything else you want to touch on with BTC.
Now we can move on to ETH. I got no more TLC references for it.
Okay.
All right, here we go. ETH. Obviously, we were trading in this flag. This is 100% a bear flag. Obviously, you see the pull there, and price are making higher highs and higher lows, and then we broke out of this, and then we broke back right in it. And where did we find rejection? Very close to this top right here. ETH was, like you said to me, it was on a mission today. It was just a missile going straight up, and we could see it right there. And that's going to move the daily stochastic RSI, I feel, pretty significantly, even though we came down lower than where we opened at. I think a lot of people just took profit, or the price just found some really good resistance at that level. We can see that the volumes kind of right down here, the volumes are decreasing as the price is increasing. Again, that's bearish divergence. That's never necessarily a good thing. And we did come below this 200 EMA on the daily. We definitely came below it. I think we closed below it on the weekly as well. But again, we went from oversold to overbought real quick, and we're going to be overbought now, and the price action is most likely going to come to the downside because, again, the DXY is still pumping right now, and the DXY compared to risk assets, one's got to go up, the other one's got to go down, not necessarily at the same time, but one will give in at some point, and usually it's fairly soon. Could this be after the weekly close? There's a good chance, you never know. But when I look at ETH, I think this is 100% just a liquidity grab. We're back in this channel. Will we break from it? If we get pretty overbought very fast, I wouldn't be surprised if we did. Again, this could play out for a period of time. Look at how we stayed overbought for a good amount of time here in the beginning of January all the way till January 20th or so, around there. The price action, let's look at the weekly. Yeah, see, we went right above this, found rejection at this line, came below the 200 EMA. So I thought this was a massive fake out for anyone who was buying above it. Came down, probably liquidated everyone here, and just shot right back up above it. Found resistance at the 50-day moving average on the weekly. So right now you're caught probably between these two ranges, the 50 and the 200 EMA. That's tightening, contraction. You're overbought on the stochastic RSI. The volumes are coming down significantly on the weekly here. I wouldn't be surprised if this thing is just, it's just like taking the necessary steps, preparation, not takeoff, but just ready to crash. This thing just on the macro, there's a lot of indication that we are finding significant resistance here. We did come below the 200 EMA. There's not a whole lot of support down here until we get to about 1338. So that's what $338 drop from where we currently are. So it's something to keep an eye on. I don't necessarily think that ETH is done liquidating everyone. I said that I think this is going to lead liquidations when the price actually starts to move. And right now we're not seeing it. Bitcoin's leading that. But I eventually think that this is going to be this is going to cause a lot of pain for a lot of people who are using leverage.
Yeah, at this point, if after everything that's happened over the last couple of years, with everyone playing with leverage and getting screwed, if you're still messing around with, I've seen people still talking about they're using 10 to 50x leverage. I'm just like, what are you doing? Like,
I'm scared.
Go to a Gamblers Anonymous meeting, I guess. Like, come on.
JWeb, I have right now I'm so risk off. Like, I'd be terrified even in a bull market to use 1 time like leverage. Obviously that's what I'm doing with spot trading, but necessarily the point is, it's like they have bigger balls of steel than we apparently do, because if you're trading that much in a bear market, that's insane. Like, probably find some help. We need Michael Jordan. What's that one Michael Jordan?
Yeah, no, I don't know if I would call that balls of steel. I would just call that a level of degeneracy and gambling addiction that I just don't have.
Brains of rock. I don't know. It's definitely something that it's like almost like jackass level type trading. Get Steve-O doing that stuff, maybe. I don't know. But
got a comment from Ace about if BTC closes above 25.5, could be off to the races. Everything's kind of pulling back at the moment. Bitcoin hit like 25.2 earlier. It's back to 24.3. ETH hit 1740 at one point, back to 1668. So we're starting to see a little bit of a cool down right here. I've been, there's been a lot of excitement with some different coins. We also had from A said it's airdrop season. Blur token led to a lot of excitement in the NFT market. I've been selling into that pump. I sold my Blur at like $1.05. So that was, some free money right there. And then we have, it just seems to me it is my time to take some profit on some stuff and just kind of hang out for a while.
Again, I just want to bring this up because even it's kind of hard to believe where we are currently right now, and to say that, oh yeah, why do you think it's going to go to 12.5K? Why do you think it's going to go to 11.5K? And again, it's almost like saying, like, how do you think we're going to go to 17.5K when we were at 47K, 2 months prior? The shit happens in this market. Like, look, it's easy to move money. It's easy to take money out. People get trapped. People forget, obviously, to take profit. They see gains, but they don't realize them. And when I look at this right now, I just want to pull up this. This is the one event from 2018 that I always reference, and I honestly think this is what's going to happen. We're going to pull that to down here. That is about 51.55%. That's the move that we saw from Monday. That's in the way now. There we go. That's the move that we saw from November 2018 all the way down to December 2018. That's a month, and we saw a 50% drop. I don't care what the price was. It was only like 7,000 or 6,000, and it went down to 3,000. That's the amount of money that left the market that fast. And we saw 47K all the way down to 26K, and then 26K all the way down to 17.5K within a matter of 3 months. Like, it was month after month after month that we saw from April, May to June. It was just nonstop selling, and nobody did anything. And obviously we went down FTX from 21K down to 15K. So there's money moves in this market. And when I see a lot of people right now getting super confident, super almost cocky in a way that, we're going to go up higher, it's like, do you not remember, like, how many times does this have to happen for people to realize that, we're priced into the market? Retail is that we always allow exit liquidity for big institutional wallets for money. It's unfortunate, but it always happens when you least expect it. Like, if you look at that chart right now.
Well, Kev, here's the thing is, I think there's still, and I don't think this, I know it, there's still a lot of people in the market who had never really been in any of these markets before stimmies in 2020, right? So there were a lot of people who were at home. They may be still working from home, but got a stimmy check. They put that into the market, and this is the first time. I mean, maybe some of them left last year when the crash, when things started to crash. Maybe some of them left last year. Some still stayed around, and they're going to have to get washed out at some point.
Yeah.
The strong will survive. Those people who are really in it for the long haul and who were invested in it besides just the number going up and kind of understood the value of crypto long term, they'll stay around.
For sure.
But I think the people who are just trying to make a quick buck, they've probably already left town, and the ones that are left may not be here much longer.
Definitely. And I mean, that's a great point. Obviously, I'm just being facetious right now, but when I look at this right here and we came down, like, this is what I expect. I expect, sideways ranging. And then when you least expect it, that's when it comes in. Again, that's how you trap money. That's how you fake people into thinking that, okay, everything's okay. It's not going to go any lower. Maybe this is just the accumulation phase, and bam, just end it all. Just send it to zero. And that's when they pick up everyone's pieces. It's almost like, was it Sonic when he gets hit and all the rings fall out? That's exactly what I expect to happen. And it's like, what the hell happened? Eggman screwed it.
Yeah, as we're speaking, there are some big red candles going on these charts. So maybe we're calling, we're calling our shot right here. I want to look at MATIC real quick before we call it a day, because MATIC has been on an absolute tear. We've gotten more positive news. It was announced yesterday that gaming company Square Enix, which is, creates some of the biggest games in the world, is going to be building out their Web3 game on Polygon. So just another thing that it doesn't do much for the price of the token right now, but it once again continues to show that they are creating huge partnerships. There will be demand for this token in the future. And, I started entering it at like 70 cents. I'm cool if we go back to that, because I want to get as much of MATIC as I can on the cheap, because I think that it has the potential whenever the next bull market comes, because it's not here yet, but whenever it comes, I think that MATIC is going to be, maybe there will be shit coins that go on like crazy runs, but I think of like some of the more well-established tokens, I think it could be the winner of the next bull run.
Oh yeah, this is MATIC. I think. I mean, even last bull run, it was insane. Like it went from, I don't remember, but I remember when it was 30 cents. I'm like, oh, maybe I should buy some MATIC. Next thing I knew, it was like $2.68. I'm like, oh, I guess I'll just be stupid this time. I'll catch you next time. And, I'll get you at 30 cents again after I win this $100 bet with JWeb. But I'm looking at it right now, and again, this is why I love the macro. I love looking at the weekly, the monthly, and stuff like that, because when I look at this, I see something that is trading in a massive, massive bear flag, making higher highs and higher lows. We broke out of it right here, very similar to how we saw ETH on the daily, but it's back in the channel, man. That's a massive channel. That's just telling me that when this thing does give, all hell will break loose. This is just asking, like, it's going to just go on a straight elevator. You're not going to see a candle that goes from 137 where it currently is to opening in the next one at 136. No, you're going to see at 137. And if you look at the 1 second chart, it's going to go all the way down to 30 cents. But no, I'm joking, obviously. But this thing is it's just trading in this massive macro parallel channel. And again, we're still in a bear market, but the price is still going up, which is odd. And obviously, I definitely give them credit because there's a ton of bullish news that's coming around MATIC. But at the end of the day, when when liquidity and cash begins to slow down and there's not necessarily a lot of it flowing around, people are going to sell assets that they necessarily have. And if they're buying MATIC at $1.20, $1.30, $1.37.63, that might be, the time where people begin to say, yeah, what, screw it. I got too much. I'm over my head. This is going to just crash, I honestly think. But let's look at the daily. Daily looks like it's been pumping extremely nice. Yeah, see that. Stochastic RSI is going up pretty well. You're above the 50 and the 200 EMA. You got a little bit of a golden cross right here, so that's obviously some bullish news for that. However, again, let's look at the weekly. You're above the 50. Where's the 200 EMA? I don't even see the 200 EMA here. Well, probably don't have it on here for some reason, unless it's higher. No, there's no 200 EMA. That's wild.
Oh, that's weird.
Yeah, let me see if I just pull this up on MATIC Binance. Oh, there's 200 EMA. It's right there. That's weird how it doesn't show up that earlier, but that's the 200 EMA right here. That little hyphen that's right there below us. But again, what's to say that this thing can't go from where it currently is down to this, and this 50 just follows right with it? Obviously, we're in a parallel channel. I see right here, even on the daily, or on the weekly. Maybe that's the one that we're talking about. But that's going to come down. I think once you get that death cross, and that might be later. That might be like 60-cent MATIC. Once maybe some of the bigger dominoes in the space fall. Obviously 60 to 30 is not that hard. And again, I'm saying 30 because I need this $100 because obviously I see opportunity by 2023, 2024. Every dollar counts. But at the end of the day, I do think that trading in something that massive will eventually come to the downside just because everyone thinks, oh no, it's going to go up forever. This is just going to lead right into the bull market. Don't think so. I think there's going to be plenty of great opportunities to accumulate MATIC. I want to buy MATIC, but I'm not going to buy it at this level because, when I want to buy it, I want to make sure that 1/3 of my wealth hasn't been depleted from buying it at 137. But that's just what I think.
Yeah, no, I mean, I don't think it's going to be staying up here. I think it's also going to be going down. And I will be ready to buy more of it because I got a MATIC bag, but it ain't big enough. We need a much bigger MATIC bag before we head into the next bull market.
Yeah, I have 0 bags, so I just got a bag of cash.
you got nothing, just a bag of cash. I mean, there are worse things you can have. Yeah, definitely worse things you could have at this point in time. All right, that is going to wrap it up for today. We'll be back on Monday, looking ahead at next week, recapping what happens over the weekend, final day of the stock market for the week tomorrow. crypto, I mean, it never sleeps. So who knows what's going to happen there. But, thanks everybody for watching. Once again, hit that like button, subscribe to our channel. If you enjoy our content, please share it around. We appreciate all the support. Our guy Ace showing up day in and day out, the absolute GOAT. Appreciate the hell out of him. So for Kevin, for the team at FLOLiO, I'm Jeremy. Have an awesome weekend, everybody. We'll see you on Monday.
Take care, everyone.